Welcome back. Time for Talking Numbers. And today, how data and trade action in the first few days of the month correlates to stock market performance in the month of September. Known as the weakest month of the year for stocks, on average, the S&P 500 is down 62 basis points in September. On the flip side, December is historically the best month for the stock market. But this year, September is off to a strong start, up 5.75% in the first 3 days of the month. So how does that change things? Giving back a bit today, but still up better than 4% on the S&P 500 for the beginning of September alone. One of the catalysts for the recent rally, perhaps, was the stronger than expected report last week from the Institute on Supply Management. Production managers participating in the survey reported an increase in manufacturing activity. It surprised analysts looking for a slightly weaker showing in that data. Based on historic returns, quants take these hints about the market and project into the future. Pankaj Patel is the Managing Director for Quantitative Research at Credit Suisse. Pankaj, good to have you on the program. Welcome.
Thank you, Maria. Good afternoon. Thanks for having me on the show.
We know that there's a strong degree of seasonality in play in the stock market in the month of September. But you found some interesting data. Tell us what you found and why you think it's relative to your outlook for the markets for the month.
Yes, Maria. What we found that when we look at PMI numbers and consumer confidence numbers, we find that whenever you combine both of those, whenever they are both in a positive territory or mildly positive territory, we find that equity market actually has a 1% return in the next month. And that was 55% of the time was true. So we take that kind of clues from the macro indicators about the equity markets.
So the first 3 days of September, the equity market was up 5.25%, down a bit today. But what can you tell us as far as what this means for the trend going forward for the month?
Okay, on that we looked at from 1928 through present. So for last 80 years, we looked at all Septembers. We found 13 Septembers where the first 3 days or before the Labor Day weekend, the month was positive. After those 13, then we looked at what was the performance of the rest of the month. What we find that in the largest 3 up months for the September, actually for the rest of the month was negative. So this does not indicate a good September from that angle.
So bottom line, how should investors be positioning their portfolio here?
The bottom line is, investors should be looking at the more macro data, as we mentioned before, like consumer confidence and PMI data and all that. And also they should look at the sector level. We believe, sectors like financials, materials, and energy should be overweighted in this kind of environment. And financials, healthcare, telecom, and financials should be underweighted in this kind of market.
So tell me that again, Pankaj. Financials should be overweight?
Yes, like when we saw whenever the PMI and the consumer confidence was in a positive territory, in those months after those months, those sectors had a positive return. So we're going from that angle.
Okay. And what areas do you think are vulnerable to downdraft?
Telecommunications, healthcare, are the two sectors we think they are more vulnerable for the downdraft.
And do you think that it changes anything, the fact that we did actually see a gain at the beginning of the month, or are you still expecting that we could see some fall off in September at some point?
Well, what we see that we expect the September month this year will be positive. Keep in mind that we are up 5.25% before the Labor Day. With today's down market, we are still around 4.5% up. So even the market goes down slightly from here, by end of the month, our expectation is that September month will be positive this year.
Okay, we will leave it there. Pankaj, good to have you on the program. Thanks so much.
Thank you.
Thanks for being our quant for the day, quantitative analyst.